Hey, good afternoon. I'm Heather Sullivan, your host of Sullivan Smart Sense. Thanks so much for being with us. It is great to have you with us once again. We really appreciate it. Today, we're going to talk about something that has been just fascinating, whether you've been trying to buy a house, sell a house, or just watch the real estate market over the last couple of years. It's been a really different and interesting kind of market. And we're starting to see some more movement now because we're finally starting to see things cool off a little bit. The Fed has raised interest rates several times this year. It's starting to have the effect that it was intended. And so we're going to be talking with a wonderful real estate expert. She's been in real estate throughout her entire career and really knows the local market and exactly what is happening and can help us all prepare, whether you're buying or selling or just wanting to understand what's going on out there. So please join me in welcoming Tricia Turner with Tricia Turner Properties. It's great to have you with us.
Thank you for having me. I'm excited.
Yeah, just to fill in our audience a little bit, and you were just mentioning to me before we got started, you have your own podcast, but we'd love to just hear a little bit about your background and your expertise in real estate.
Absolutely. Well, first of all, I've been in real estate for over 20 years, born and raised here in Houston, Texas. I now reside in the Katy, Fulshear, Richmond area, and our real estate company has been in this Katy, Fulshear, Richmond area for about 10 years now. I've been at every big box company out there, starting with Gary Green, Keller Williams, Coldwell Banker, Remax, and then some discount brokerages before opening my own brokerage. And then shortly after opening my own brokerage, I had about 50 agents at the time. Did not really enjoy that. It wasn't all that I thought it was going to be. And so about 4 years ago, I switched over and have a mega team within eXp Realty, which is a global brokerage. And we've got about 26 agents on our team right now.
Wow. And you really cover the gamut in terms of you do homes and commercial properties and all that kind of stuff.
Yeah, we do. We do everything. And the commercial, I tell everybody it's kind of like the wild, wild west. You really have to know what you're doing when dealing with that. And so the majority of commercial is done with me and one of our other agents, but most of our agents are residential.
Okay, great. Well, I want to invite our viewers, by the way, post those questions. Let us know if you have any questions. We would love to answer your questions while we're here. But let's go ahead and dive in, Tricia. Let's talk about, we're starting to hear about and see a little bit of cooling in the market. So just kind of give me a feel for what you're seeing, what's happening out there.
It's crazy because I talk about this stuff all the time and I tell everybody, real estate in a traditional market, and real estate's cyclical. It's not like the stock market in some senses of it. The real estate market, traditionally, you could figure January was usually our slowest month. September was typically a slow month. And then we'd start ramping back up October and November for people that wanted to close by Christmas, end of the year. However, when COVID hit, the pandemic, things changed. Now, when COVID hit, like that, whatever that was, March and April, 2 months before that, we were starting to see what we call a seller's market. There was indications of inventory tightening, not as many homes on the market. Once COVID hit and we had that kind of shutdown for about 6 weeks, we sat in our office, we were doing all of our marketing, we were ramping up. And as soon as we opened back up and we could do things in real estate, everything was on fire. And we had people coming in from all different states, especially California, and home prices just started escalating. And typically in the Houston market, especially Texas, we usually see about a 2.5 to a 3.9% housing appreciation. However, during COVID, we saw an 18 to 34% housing appreciation, which is insane. You had people coming in, from California, from Washington, from Seattle, and they were putting 30, 40 offers in on properties, some of them $80,000, $100,000 over list price. And, it was insane what was going on. It was a frenzy that we'd never seen before. And people that were living through it like us, it was a hard market. It was hard because buyers were getting pushed out of homes. First time home buyers were completely removed from the market. And it was really just like a shark fest, something that, was very stressful because as a buyer's agent, a lot of my agents, they were on call 24/7 because, as soon as that home hit the market, heaven forbid you didn't get right in there and because you would lose your opportunity. And so it was really a hard time for a lot of people. We're welcoming a little bit of a slowdown. It's just a different market right now.
Yeah. So when we talk about a little bit of a slowdown, paint a picture for us. What does that mean? How much better is it right now?
Okay, so if we look back a year ago, probably like June of 2021, house would go on the market, and pretty much anywhere, not just small pockets, but pretty much anywhere in Houston, you would get anywhere from 10 to 30, 40 offers on a property, and they would be some of them coming in before the house even hit the market. Now, in March, April of this year, 2022, we, the experts that were studying it, I started saying to everybody, you guys, we're starting to see a slowdown. All of a sudden, we may not get 30 offers. Maybe we're getting 20. Maybe they're not even coming in until after the house hits the market. And that started happening almost every single day. There was a little bit of indicators, just key indicators. By June, pretty much June 1st, we almost had come to a screeching halt in a lot of areas. Homes were sitting, open houses have no activity in them. People that weren't paying attention to the market were like, oh my gosh, this happened overnight. But it didn't. It really started in April. And the all of the economists, not all, the ones that I pay attention to, they all say, well, if you look at what was happening, especially in Austin, Houston, Dallas, the three hottest markets in Texas, home prices were escalating so fast that was not sustainable. There had to be an end. There's always an end. And so when they started the interest rate hike, in my opinion, I think it was too much too fast, because here you were at 2.5, then it went to 3, and then it went to 3.5, and then the next thing you're at 5. And it's like, oh my gosh, what happened between 3.5 and 5? And
Yeah.
so buyers, of course, chaos mind says freeze. They don't make any moves and they just stop. And so what ended up happening is more houses have come onto the market and interest rates have continued to rise. And so when we say a cooling off, we're now looking interest rates as of today, slightly over 7. And home buyers that were originally looking at buying a house, say a year ago, when interest rates were 3%, they could then afford a $600,000 home. Today, it's 300,000. So if you're a home buyer and you're looking at that, you're like, well, my gosh, that's a totally different house than what I wanted a year ago. Now I don't know that I want to buy a house right now. Now I'm going to wait and see if home prices come down. Now I'm going to wait and see if interest rates come down. And so there's a lot of that uncertainty and a lot of people sitting on the fence.
Okay, that was a great explainer. And I was going to ask how every time we see that uptick in the interest rate, how that kind of translates into what people can afford, how much house they can buy.
It's a lot, and we tell people, number one, if you're not teamed up with a mortgage lender, you need to be, because with interest rates changing as fast as they are, your pre-approval is also changing just as fast. And so now key indicators are, what is the tax rate there? Tax rate really matters, because a year ago when people, and the sad thing is, a year ago, people were buying homes, and did they pay maybe too much for some homes? Possibly. No one knew what was going to happen. No one knew what to expect. But what happened was a lot of people were pulling out of all of their cash, out of their 401ks, out of their savings accounts, because they had to. They had to compete with these multiple offers. And there were people that were in fear of never finding a home. Well, now fast forward a year later, we're not in that situation. And so it's a whole different market out there. And I tell people every single day, number one, you've got to have a financial advisor that you trust and is willing to really go deep in a conversation with you, because it matters right now. Every dollar counts, every tax rate counts, every payment counts. Do I believe the 7% interest rate is here to stay? I do not. Now, I pay attention to a lot of people that are really well versed, I would say, in our economy and the real estate, and cyclical. They've been in business for years. We've seen this happen before. They believe that the interest rates will come back down. And here's why. Number one, a 7% interest rate, even 7.25%, it's not unheard of. I was a lender also from 2004 to 2010. And during that era, even before the 2008 crash, our interest rates, the norm, were like 6.5 to 9%. 6.5 was a great rate then. Then we had the mortgage crash in 2008. So 2008, 9, and 10 were really hard years. And then for the last several years, we've had basically free money, where you've had interest rates less than 4%, less than 3%. So we've seen the whole gamut of interest rates. What we're seeing right now is traditionally a normal market as far as interest rates go, but people just aren't used to it. So they're
Yeah.
not making a move. However, With the housing industry, every time we, the housing experts, sell homes or involved in home sales, it trickles down to 26 different industries. And people don't realize that. You've got home inspectors, you've got insurance agents, landscapers, cleaners, title companies, inspectors. It's 26 different industries. So when our industry slows down, it affects 26 different industries and their families. And so when you start to see layoffs in other industries, a lot of that is because of the housing industry. So in my opinion, and the people that I collaborate with, this is not sustainable because our economy is already volatile enough. And now we've got people in layoffs. Now we've got people not making a move. And so there's going to have to be a change. Will it go back down below 4%? I do not believe so. I think that is gone. Do I think it will go below 5? I do. The people that I pay attention to think it could happen as soon as the spring, but you've got other people on the other end. They're like, no, we think it's going to go to 8. So you really have to be careful who you're paying attention to. And we tell people every single day, it's still a great time to buy and sell. Real estate is still your soundest investment. And if interest rates do go back down, as we believe they will, you can just refinance. It's a very simple thing to do, but don't miss out on buying the home of your dreams right now.
Well, and let's talk a little bit about, because if there are people that, maybe they got out of the home search when things were really crazy, and now they're seeing it cool off a little bit and wondering, is this the best time? You've talked a little bit about what you expect in terms of interest rates, but I'm wondering, because some of the realtors that I've talked to have said, Houston historically had kind of lower home prices than major cities in the other parts of the country. And so they said in some ways this was kind of just like a correction or a catching up to what is more normal in the rest of the country. So I'm wondering, do you think that home prices will come down enough that like back to what we used to know and be comfortable with? Or will they just stop accelerating? Like, I'm wondering what you think will happen to prices of homes in general.
Okay, so on that note, and again, in Houston is so diverse. Before COVID, the Inner Loop, the Galleria area, Westview, all of those were hot pockets, anything close to downtown, because everybody was commuting. COVID hit and people started working from home. And now people have realized I can work from home, and big box companies are like, I'm going to keep my people working from home at least half of the time. So what ended up happening during COVID was the Inner Loop areas actually flatline. You didn't see multiple offers on those properties. You didn't see their home prices escalating. It was the suburbs that did. And so we still have several pockets all in the suburbs where homes will come on the market and they're still getting multiple offers, maybe not 10, maybe only 2, maybe not $30,000 over list price. Maybe they're getting list price. In a normal market, you can expect a home to sell if it's priced right for 97 to 98% of that list price. So what's happening right now, if homes are priced correctly, they will sell for that. So you won't see big price adjustments and you won't see a deceleration in pricing. What you will see, unfortunately, and we are seeing it, is that there are still sellers that are either misguided or misinformed, or they just have their own beliefs that the housing market is what it was 6 months ago and even a year ago. And they believe their home is worth more than it maybe is worth right now. And no one is correcting them. And they may be, suited up with a real estate company that is allowing them to dictate what the home is priced at. And so you're still seeing homes come on the market grossly overpriced. And you're seeing real estate agents not guide that home seller. Naturally, the home will sit on the market and it will fail to sell. And while it fails to sell, you'll see price reductions, and there'll be price reductions that are not effective. There's a strategy to reducing a price, and it's always based on a pricing strategy. And if you aren't an expert, you don't know that strategy. And so there's a lot of agents out there that are misguided and, they're inexperienced, because our real estate industry grew to its biggest population during COVID. That was the most real estate agents licensed ever in the history of real estate. And so naturally, they are not skilled and they're not highly trained. And these poor homeowners are putting their homes on the market, one of their largest assets of their life, and being misguided. And so when a homeowner does that and you see price reductions and price reductions and price reductions, it makes them lose their position in the market, because buyers are watching that. And then buyers are coming in with low offers. And that's when you'll see Sellers sell for less than they should have because they weren't represented properly. What I hope happens and what I'm encouraging, and this is one of these reasons I love talking about this, is that people that are experts will come together and that will really have this united front for the home buyers and the home sellers, that we can be like, look, this is really what market value is of your home. And if we price it correctly and market it correctly, this is what it's likely to sell for. And we're going to stand firm on our price. We're not going to get desperate and do these drastic price reductions, because that's not what's fueling our economy. The interest rates are what is fueling our economy right now. So we can do a $10,000, $20,000 price reduction on your home. Will it help it sell? Maybe. Maybe not, because people are still scared of this interest rate, even though they shouldn't be. And it's just now a matter of us turning into consultants, not salespeople. We've got to educate, consult with them, have long conversations. Let's look at the numbers. What does this even make sense right now? Maybe you shouldn't be looking at this neighborhood. Maybe you shouldn't be looking in this city. Maybe we need to go a little bit further out for now, while things, what we call flatline a little bit. Things have to adjust. We've got to let the market do what the market's going to do. At the end of the day, we still have a housing shortage. We still have a lot of homes that are out there. We still have a ton of buyers. They are just confused right now, and they're not educated, and they need to be. There's a lot of the media, unfortunately, that brings in negativity, and they're fear mongers, and they tell them, that this housing bubble is coming, this housing crash is coming. That is not true. No one that I collaborate, and I collaborate with the top teams across the nation, none of us believe that that is coming, because what happened in 2008 was people did not have equity in their homes. There was 100% financing programs, 103% financing all day long. Those were gone years ago. People right now have anywhere between 20 and 50% equity in their homes. Most people, which is a lot. Therefore, if they do get in a situation and they have to sell because of something in our economy, they can sell their home and they'll recover. They'll be just fine. So we're not looking at that. The other indicator that we will not have that is 2 years ago, a year and a half, 2 years ago, when the stock market started getting so volatile, there were large groups of investors that pulled a great bit of their money out of the stock market, and they formed these investment groups. And they are buying literally a third of the homes that go on the market. They're buying nationwide, and they're not buying them for flips. They're buying them and holding them as long-term rentals, because the rental market, of course, has grown like crazy because of COVID. And so when you look at that, with real estate being the soundest investment out there, and these investors out there just waiting for properties to come on so they can scoop them up, I don't believe we're going to see a foreclosure market at all. And so I think for buyers, the best education for them is get with the right lender and the right real estate expert, number one. And if you're in the market to buy a house, it is a great time to buy a house. Interest rates may be a little bit higher than you'd like. However, if they come back down, and we do believe they will, you just refinance, and then you've got more equity in your home and you can adjust your payment. So it's still a great, great market.
How would you advise a buyer to sort of prepare? Because in the really hot market, it was, try and get have a cash offer if you can, get in there quick. I mean, there's all these things. People were writing letters to sellers. What does a buyer need to do now if they want to try and be competitive in the market?
So nowadays, again, when homes, if you are paying attention to this, you know if the home is priced right, it should sell between 97 and 98% of that price. So is there room for negotiating? Likely. Now, homes with pools, if it's an amazing pool, not so much. You've got to keep in mind there are still sellers that are very firm on their pricing because they're being misguided. I would say remove emotions, number one. You've got to remove your emotions. Don't get hooked into a power struggle. At the end of the day, if this home is the one that you want, if it's $2,000 or $3,000 that we're talking about, in my opinion, it's not worth it. It's like, let's just make this work for the best of both of us. But more importantly, it's going to be the financing. When we start seeing different times in the real estate market, we see different loan programs. And being a real estate team, you usually see like real estate companies that will have one or two preferred lenders that they usually work with. Nowadays, and especially in the last 12 months, we can't just limit that to one, two, or even three, because there are so many different products proprietary to that company that are really good for different buyers in different situations. There is even now a 100% financing program that has been unheard of, and there's really only one company that offers it right now, but it's a great alternative to buyers that maybe couldn't afford to buy before. So number one, you've got to get hooked up with a bank that can guide you, get your financing in order, understand what your payment will be should that interest rate adjust a little bit, and then have patience. Don't go out there trying to strong arm the sellers. Keep in mind that it's a peaceful transaction. Everybody's got a reason why they're selling. 85% of home sales are because of a life change. It's either a divorce, a death, a job, a baby, a job transfer. That is what fuels most of our sales. And so I think when you start to really understand, maybe that seller is going through something, maybe they're going through a divorce, maybe they're having a hard time, maybe that's why they have their emotions on high. You as a buyer maybe should turn yours down a notch or two. Let's have some more compassion and understand that, too many times the real estate agents get into a power struggle and they get emotional. And I think if buyers and sellers would kind of tone that down too and get their agents to tone it down, it would be much better, because at the end of the day, the sellers want to sell and the buyers want to buy. And we, as the real estate professionals, need to maintain that constant composure and that constant professionalism. But buyers just need to be aware of the market, aware of the numbers, make sure there was somebody that's an expert and that can guide them into what is that home really worth, and then a lender that can really help them with the numbers.
For someone who wants to sell their home, one of the issues that we've had, and I guess we're still dealing with, is sort of low inventory, and that's because a lot of sellers were kind of like holding off as well. What would be your advice to a seller? And also, what are your thoughts on when you think we might have, I guess, a more normal level of inventory?
So for all of the sellers that are watching this, patience. Oh my gosh, we need you to pack your patience. There's a lot of changes in our industry. There are a lot of companies out there that are discount companies. Redfin is one of them. We don't really like to follow that model. We believe when I went to real estate school many years ago, my instructor told me, your job as a real estate professional is to get that seller the most amount of money for their home in the least amount of time with the least amount of stress in their life. And he ingrained that in us. And so throughout my entire career, that has always been my focus. However, several years ago, there was really a need for training. Once I got my broker's license, I really noticed the other agents weren't trained at the level that I was, and that became a passion of mine. And so we formed this training because the consumers need this. They expect it, and they want you to be highly trained, and they want a different level of service than what they used to have years ago. And so like within our own company, we've got our own staging company, we've got our own moving truck. We go above and beyond to help our sellers, get the most amount of money for their home in the least amount of time with the least stress to them. It may be less profitable to me as a business owner, but I don't look at that. I look at the experience of the sellers, and we are making sure, because a staged home sells for more and faster than an unstaged home. So we're going to go in and do that extra thing. And I think sellers need to require that, because in the market that we are in right now and where we're not headed into another seller's market. Do not mistake that. We are not. You will not see 2023 another seller's market. What you need to think about if you want to sell your home is make sure it's priced competitively. Let's always look at those numbers, make sure it's marketed correctly, make sure it looks amazing. And then sellers showings are a big thing, because really there's only 4 reasons homes don't sell. The number 1 is competitive pricing. Number 2 is marketing. Number 3 is the seller. Oftentimes the seller will interrupt that sale because they will not allow showings, or they'll decline showings, or they won't allow open houses. And a lot of times they'll hinder that entire transaction. And then your number 4 reason is you're not hooked up with a local expert, someone that can really guide you and help you make those decisions and make that strategic pricing. So for sellers, those 4 things have to be in alignment, and then patience, because what we're dealing with right now, the interest rates, we have no control over. We can do all the marketing in the world. We can do open houses every single day, all day, but we cannot make buyers write offers. We cannot drag them into your house. You have to trust who you're with, trust that they're doing a great job, and then wait. It will happen. It's just not going to be overnight. It could be 60, 90, even 120 days now.
Okay. We got a good question from one of our viewers. T is asking, is Rocket Mortgage a good place to get a pre-approval letter? And maybe we should just talk about pre-approval letters in general.
Let's talk about pre-approvals. Pre-approvals are usually good for 90 days because the market is shifting so much right now, especially as a listing expert. When I see a pre-approval come in, if it's not within the last 30 days, I pretty much disregard it. So number one, you need to make sure you have a current one. Rocket Mortgage is a big lender, but there are a lot of big lenders out there. And I would encourage you to maybe not go online and go with somebody that you don't know, but look, get yourself teamed up with somebody that can guide you there, somebody that maybe you can talk to locally, because there are so many different programs now that have birthed just since COVID and even this year that can help you. There's some that have different interest rates. There are adjustable rate mortgages. But if you're not able to actually sit down and go over like a portfolio of programs and have someone really show you this is what your payment's going to be here, here, and here, then I would say that may not be the best solution, not in the market that we're in right now.
Okay. Well, Tricia, I can't believe it's been almost a half hour already. We've gone through so much so quickly, but I want to thank you so much. And I want to show folks, if you want to reach out to Tricia to get some more information or some advice, there's her number there. And again, her company is Tricia Turner Properties, right?
Yes, ma'am. Yes, ma'am.
Yeah. And I want to thank you so much because boy, what great insight you have. And it was so great to be able to talk to you and sort of get a feel for what's happening in all of this craziness and where things are going. So
Thanks, you guys. Y'all have a great day.
All right, you too.